If you really look at last 7 days in the market, I think you would have seen there's a huge amount of volatility, and it was a coincidence that we also had a budget coming up, and there was a new tax structure of LTCG coming into play. There is always a question whether the markets have been spoofed because of this. My view is that it is very limited role to play. The global volatility is what is working on at the moment of time. It is largely because you have globally the yields are going up, especially US yields, and that also is reflected in Indian yields. So typically you'll see a huge amount of volatility. In my belief, that should settle down in another 3 to 4 weeks, and you'll have challenges going forward in terms of equity as an asset class. But if you look at from a debt perspective, I think it's very interesting play where you will find the debt returns to be very attractive. Our internal opportunity is that keep buying equities, make sure that you buy blue chip stocks going forward, and restrict your exposure to mid caps and small caps, and keep working on your asset allocation going forward. I think the existing investors should stay put on in terms of what they have. If they believe that their portfolio is looking in from a 3-year perspective, I think you can add up some stocks, especially on the blue chip side. If you are a new customer, I still say that please continue to do an SIP. Focus on clearly on a large cap at the moment of time. Don't shift your strategy to a small cap. If you don't want to look at a large cap mutual fund, look at multi-cap mutual fund, which will give you better returns. And keep in mind that at the moment of time, we should not change your asset allocation, because at the moment of time, the volatility is so much in both asset classes. You will not be able to determine the risk-reward ratio. So keep your asset allocation intact at the moment of time.